Industries. That's the one in focus. Sachin Raole, CFO and Director Resources at Praj, joins in on the show right now. Sachin, great to have you on the show. You reported a strong revenue growth this quarter, strong execution of the order book, I guess. But the order intake has been declining over the last few quarters, Sachin. Do you expect the order intake trend to reverse anytime soon?
Hello, good morning to you and your viewers. Yes, the order book has shown some kind of a decline as compared to the last quarter, but that's not an indication what is going to happen in future, because order closure in case of project companies definitely takes some kind of a time, and that's what is reflected. I don't see this is an indication what is going to happen going forward, going in future from the order booking point of view.
We also have the big event lined up today when Prime Minister Modi is all set to launch the E20 fuel, a blend of 20% ethanol with petrol today. In fact, the 20% ethanol blended fuel will be available at select outlets soon as well. Given the fact that we have been much ahead with respect to the blending targets, when do you see this 20% target being met?
So if you know that the target actually is advanced from 2030 to 2025, and we are actually running ahead of the capacity creation for ABP 20. And as you rightly said, Honorable Prime Minister is going to announce this E20 blended petrol to be available very soon. So it is becoming a reality that petrol will be available with a blended ethanol of 20% very soon.
All right, good to know. Wanted to also understand that, given the industry dynamics do look rather lucrative and fairly promising, what is the game plan now in terms of your growth drivers? What are your capex plans down the line?
Oh, we have actually lined up a huge capex plan for the coming year, because we are seeing the capacity creation which is required for our other businesses, mainly on the engineering side. We need to put up at least 3 to 4 times of our existing capacity in the new factory space, which is going to happen in the next 12 to 15 months. The total capex outlay we are estimating around 100 crores, which will be spent in a period of 12 to 15 months. This will create a completely new facility to cater to the engineering businesses, where we see a good traction coming up on the backdrop of whatever is happening in the energy transition and climate action. So we see a good traction coming up on that side of a business. If you look at ethanol business or the bioenergy business, and it has two segments. One is on the ethanol, that is a liquid fuel, and CBG, that is compressed biogas, as the gaseous fuel. We see the business actually doing well in both the segments going forward. There is always a concern on the ABP 20 coming up a little early of its target, what will happen beyond that, but we see a good amount of traction still remaining in the ethanol space going forward also after meeting the ABP 20 target of 2025. So all in all, we see a good prospects for all our businesses going forward.
Right. Also wanted to talk about, sugar exports, which for the season have been capped at 6 million ton till about May 2023, as I understand. Considering how the season has panned out so far, how much of an increase in export cap do you expect for the season 22 to 23?
I don't see any increase in the exports, because if you look at the ethanol demand in the country is so high. And if you have heard about the sugar industry's commentary on this line, they are more than happy to have diversion to ethanol than to get sugar produced and getting it exported. Indirectly, it helps from the country's point of view, because then there is no subsidization of export of sugar in that sense. And it helps us to have a green fuel availability in the country. So maybe it will remain in a range of 6 million from the exports point of view, not going beyond that. But it depends how the availability of sugar or how the availability of the feedstock available for the sugar production.
Point taken, but let's come back to your business. If I have it right, the domestic market share that you earlier commanded was close to 65%. What is it at currently? And with respect to the export demand as well, there were some further orders and ramp up that was expected, especially in Canada and Mexico. How are things trending when it comes to the export side?
Okay, in the domestic market, we have bit changed our strategy. We are right now looking at how to expand our margin trajectory instead of increasing only on the volume gain. So we are very choosy at this point of time what kind of orders we are intaking, and that's what is also getting reflected to so-called from the market share point of view. Our market share is somewhere around 50% in the domestic market, and I think going forward our endeavor is not going to look at market share but look at how the margin is expanding from the profitability point of view. On the export side, sorry, your question was related to export. On the export side, yes, we have already put up a plant in Canada, and we see the demand for ethanol because of the low carbon intensity is coming up from the Americas market going forward.
Sure, point taken. But Sachin, since you're saying that you're going to focus more on margins and profitability, what's the targeted margin then? Because it's close to 10% now. Are we likely to see double digit 12 to 13% soon?
So yes, our objective or target is to be in the double digit margin kind of a range going forward.
And given that the late rainfall in UP has led to excess sugar inventory in the country, that seems to be limiting the upside on domestic sugar prices. Just want to understand what your outlook is on sugar prices. Do you expect them to remain steady going forward?
I will not be the right person to predict or comment on the sugar prices, but looking at overall availability of the sugarcane from the country point of view, I think it should remain in a range bound. It should not have any adverse effect on the sugar prices.
Okay, so that's the point taken as far as that is concerned, in terms of the sugar prices. But you were also diversifying into wastewater treatment, critical process equipment, as well as high purity business. Can you talk to us about how are things moving as far as these segments are concerned?
Yeah, so engineering business, as I earlier mentioned, is expanding very well, and it is progressing the way in which we had planned. Rather, we were working on this engineering segment since last 2 3 years, very very strategically. We wanted to get this business to come up to the level of bioenergy going forward. We are also trying to integrate, especially the critical equipment business, integrated with our energy transition and climate action agenda. The modularization program which we are running is now not only going to be servicing the oil and gas and the CNG kind of a business, but it will also be serving our business, especially from the modularization point of view, where we will be blending modularization for our offering in the second generation ethanol and the SAF offering. All in all, I think the engineering business going forward is going to show a great promise, and it is going to be a very big balancing kind of a business from the bioenergy side for us.
Appreciate your time. Thank you so much for joining in and giving us an outlook on your overall earnings as well as how you're looking at your capex plans down the line. That's Praj Industries for you. Just a quick check-in.